Hi, I'm James Nelson, Vice Chairman of Cushman & Wakefield, and I'm here to bring you the Nelson Reports August 2016 video exclusive. I'm here with Conrad Wayman, who is founder and partner of Mallory Capital Group. Good morning, Conrad. How are you?
Good morning, James. How are you? Good. Great to be here.
Thank you for joining us. Please tell the audience a little bit about Mallory Capital. What do you all do?
Mallory Capital Group is a private placement agent. That's the term of art. And we raise money for private equity managers of private equity funds, both in the private equity, private real estate, and beyond that strategies. We raise money from primarily from institutional investors to invest in their offerings.
Perfect. And you are, at my understanding, you have to be a licensed broker-dealer. Is that correct to do this?
We do. What we're selling are securities. They're privately placed. So they're not being offered in the public market, but they are securities. And to sell securities, you must be a licensed, SEC licensed broker-dealer, which Mallory Capital Group is.
Perfect. And most of the Nelson Reports audience is New York focused. I know your company advises all throughout the U.S. and around the world. What type of institutional profiles are out there? Who are your typical investors?
Well, our investors really run the gamut on the institutional community, from sovereign wealth funds, public and private pension funds, insurance companies, foundations, endowments, and as importantly, family office groups. Mm-hmm. We do a lot with family offices.
Perfect. And what are the different types of investments that those groups look for?
So on the private side that we're dealing with, it'll be private equity funds, would be buyout funds or growth equity funds for the growth of a business. Mm-hmm. Certainly in the real estate area, it's a big part of the private market, and we do a lot there. There's more growth now in infrastructure funds than ever before. There's also some private debt that's raised. Uh-huh. So we kind of deal in all the strategies that are on the quote private side.
And it would seem to me that the sovereign wealth funds are usually doing the larger trophy assets. Oftentimes they like to buy the asset direct, but again, for a lot of our audience who's kind of in the the middle market space, if you will, it would seem to me that is it the family offices, the endowments who are kind of most active looking at those profiles of deals? They
are. In fact, the family offices have also always been an investor in real estate over the years for a number of reasons. They look at it as an inflation hedge, mm-hmm. which it certainly is. Now, we haven't had much inflation since the early 80s, but at some point that may come back. But in addition to that, in real estate, you participate in the growth of the economy, as well as a real estate investment typically generates income. So it's really a three pieces of return that interest the family office and the other sets of investors out there.
Great. And are they looking to buy at the asset level, or are they typically doing this with fund managers?
Typically at the area where we primarily focus. These are the smaller funds, so funds in the $100, $200, $300 million range. Mm-hmm. Typically, they work with fund managers, and in this market today, there's a shift towards value add, which means managers who kind of get a hold of a piece of property and reposition it, repurpose it, and bring value from that activity, and bring up the rental roll, increase the NOI effectively. That's the kind of return that people want to have that's generated from that activity, and we tend to focus on those kinds of funds.
Perfect. And I know that last year, at least here in New York, we had a record year, $74.5 billion of sales, a lot of transactions. I know the U.S. experienced similar type activity. So has that's probably been a result of a lot of capital being out there looking to be placed. Do you expect that trend to continue? Are you seeing that at present?
We do. We think 2016 is going to be another record kind of a year. 2015 was the largest capital raise year since 2010.
Really?
Although interestingly, the number of funds that participated was greater also. So the size of the funds tended to be decreased, and I think that's because folks want to get closer to the asset and the groups that can get in there and drive value. And that's what we tend to focus, as I said before.
Perfect. So a lot of our audience are successful operators. They might have built up a portfolio of 15, 20, 30 buildings. For those who would like to operate under a fund structure, what advice would you give to someone who's looking to start a fund?
I would say they should get with a fund management group. To start from scratch with a new fund management is very difficult. You need a group that's been together for a long period of time, investing in the kinds of strategies they hope to go forward with and have a successful track record at doing that. And all of that takes time, it's expensive, and frankly, many investors don't like to invest in first-time funds. It's very difficult to get those funds raised. So to align themselves with an experienced fund management group would be the way I would suggest they should go.
Perfect. Well, that's great advice, and really appreciate your coming in, and look forward to being in touch.
Thanks, James.
Sure
Great
thing.
to be with you.
Great.